In the quiet hum of a suburban kitchen, morning coffee brewing, sits Mark. He's in his late 40s, a decent guy, works hard. Not a Wall Street wizard, just a dad trying to make ends meet and maybe, just maybe, leave something better for his kids. For years, Mark watched the headlines. The endless chatter about gold, the ultimate safe haven, inflation hedge, the rich man's metal. But gold felt out of reach. A shiny, untouchable fortress reserved for those with overflowing bank accounts. The price per ounce was a barrier, a silent bouncer at the door of financial security. Just buy silver, a voice whispered from online forums, from that one friend who always had a hot tip. It sounded like a more democratic proposition, a metal for the everyman. This isn't just Mark's story. It's the quiet underlying sentiment for millions who eye the precious metals market, wondering if there's a place for them, if silver truly is the accessible alternative to gold or just a fleeting fever. The story of silver, like a well-worn heirloom, stretches back through the annals of human civilization. Around 3000 BCE, long before cryptocurrencies or stock exchanges, silver first shimmered into human hands. It was fashioned into elegant jewelry, hammered into ornate cups for kings and queens, and minted into the very first coins that facilitated trade across the ancient empires of Europe, China, and Arabia. Gold, of course, was always there, rarer, more lustrous, and perpetually perceived as the exclusive dominion of the elite, the ultimate symbol of power and wealth. Silver, in contrast, often served as the workhorse, the everyday currency that greased the wheels of commerce, fostering a sense of shared economic participation. It was the metal for the people, woven into the fabric of daily life, rather than enshrined in distant vaults. Silver truly reached its monetary zenith in the 19th century, a time of grand industrialization and burgeoning global trade. Across Western nations, a fascinating economic experiment took hold: bimetallism. This system linked the value of a country's currency to a fixed ratio of both gold and silver. Imagine a bustling London street where a gleaming gold sovereign could be exchanged for, say, 20 shining silver shillings. This dual standard aimed to provide a more stable and flexible monetary supply, recognizing silver's enduring role as a trusted medium of exchange. It promised stability, a tangible asset backing the paper money people carried in their pockets. For a time, it worked, providing a sense of security in an era of rapid change, giving both metals a vital, intertwined role in the global economy. But the very strength of bimetallism, its dual nature, proved to be its undoing, a classic tale of economic arbitrage. As the relative market values of gold and silver fluctuated, clever individuals, often known as arbitrageurs, would exploit these disparities. If the market value of silver dipped relative to its fixed monetary value, they would melt down silver coins, sell the raw metal for a higher price, and then use the proceeds to buy gold, creating a profit out of thin air. This constant manipulation led to governments gradually removing silver from their coinage. The final, decisive blow to silver's monetary role, and indeed gold's, came much later. In 1971, when the United States officially ended the gold standard, this pivotal decision severed the last tangible link between currency and precious metals, ushering in the era of fiat money, where the value of currency is derived from government decree and public trust, not from a physical commodity. It was a seismic shift, fundamentally altering how we perceive and interact with money. This brings us to a moment in history that still sends shivers down the spines of commodity traders: the Great Silver Market Event of early 1980. Picture a landscape of raw ambition, a high-stakes gamble fueled by immense wealth. This was the story of the Hunt brothers, Nelson Bunker Hunt and William Herbert Hunt, Texas oil magnates with an almost insatiable appetite for silver. They believed inflation would soar, and silver, in their minds, was the ultimate hedge. So, they began to hoard it, buying massive amounts of physical silver and futures contracts. The price, which had comfortably hovered around $1, $5 an ounce for years, began an astonishing ascent, skyrocketing towards an unthinkable $50 an ounce. Small investors, seeing the frenzy, piled in, hoping to ride the wave. They saw the Hunts as visionaries, trailblazers, who were unlocking silver's true potential. But the market, like a tightly coiled spring, can only be stretched so far. The government, fearing a complete economic collapse and an erosion of confidence in the financial system, intervened. Regulations were tightened. Margin requirements for futures contracts were dramatically increased, and the market, stripped of its speculative oxygen, utterly collapsed. For Mark, or rather for the countless small investors who had jumped in at the peak, watching their life savings evaporate as silver plummeted, it was a brutal, unforgettable lesson. It was a crash not just of prices, but of dreams, a stark reminder of the psychological traps inherent in chasing quick riches, the belief that one could simply follow the big money without understanding the underlying risks. Without a robust risk management strategy, proved to be a catastrophic mistake. The emotional appeal of easy money overrode rational analysis, and the consequences were devastating. After the dramatic volatility of the early 80s, silver seemed to recede somewhat from the everyday investor's consciousness, yet its story was far from over. A new chapter began around 2006 with the launch of the iShares Silver Trust, or SLV, an exchange-traded fund. This was a game-changer. Suddenly, investing in silver no longer meant grappling with the logistics and security concerns of storing physical metal. Now, an investor like Mark could buy shares in an ETF, giving them exposure to silver's price movements with the ease of trading a stock. This accessibility brought silver back into the mainstream, especially during periods of global uncertainty. During the financial crisis of 2008 and again in 2011, as economic anxieties mounted, silver prices rallied, reflecting its traditional role as a safe haven. However, this resurgence proved transient. As the U.S. economy began to recover, and particularly as interest rates started to rise and the U.S. dollar strengthened, the appeal of holding non-yielding assets like silver diminished. Its price experienced subsequent declines, leaving some investors wondering if its moment in the sun had passed. Yet, silver's narrative is constantly evolving, driven not just by financial speculation but by its undeniable utility. Today, we are witnessing a powerful resurgence in its industrial demand. Silver is a critical component in a myriad of modern technologies, from the intricate circuitry of our electronics to life-saving medical devices. But the truly explosive growth is coming from the renewable energy sector, especially solar panels. Silver's exceptional conductivity makes it indispensable for efficiently converting sunlight into electricity. Each solar panel relies on tiny hair-thin silver lines to capture and transport energy. As the world shifts towards green energy, the demand for solar installations is surging, and with it, the demand for silver. This isn't a speculative frenzy. It's a fundamental, structural shift that promises sustained, long-term demand. This surging industrial demand, particularly from renewables and electric vehicles, is now colliding head-on with a struggling mining supply. New silver discoveries are rare, and extracting existing deposits is becoming more challenging and costly. This fundamental supply-demand imbalance is creating a potent cocktail for price appreciation. In 2024 to 2025, we've seen silver prices climb steadily, hitting highs of around $40, $44 an ounce, levels not seen in over a decade. This upward trajectory has once again caught the eye of countless small investors, people just like Mark, who see gold still hovering at intimidating heights. For them, silver has re-emerged as the genuinely affordable alternative, a tangible asset that feels within reach. The narrative of the people's metal is gaining traction once more, driven by real-world applications rather than just speculative fervor. So, what's the key takeaway from silver's tumultuous and evolving story? Compared to its glittering cousin, gold, silver undeniably offers a lower price entry point into the world of precious metals, provides a tangible store of value, a potential hedge against inflation, without the prohibitive cost per ounce that often deters smaller investors. For those with modest incomes, it truly can feel like a more democratic investment. And right now, with the powerful forces of industrial demand, especially from the burgeoning renewable energy sector, clashing with a constrained supply, there's a compelling argument that silver's ascent might not just be a short-term fever. It could well be a sustained trend, cementing its place as a crucial metal for our future, and a potentially rewarding asset for careful investors. Thank you for watching and for joining us on this journey through silver's rich history and its promising future. If you found this analysis helpful, please hit that like button Share this video with someone who might benefit from it. And subscribe to our channel for more insights into the markets that shape our world. We appreciate your support.